How's it going, everyone? It's Sam. Today I want to talk to you about some things that crypto investors are getting really wrong. And this is based on a lot of my own experience. I've been looking at crypto investing in crypto for a couple of years now, and I've noticed a lot of things. And just being around this and talking about it every day, there are some things that just are so obvious to me that I think to newer investors and even people that maybe been around for a while, they're still learning. And a lot of it has come through trial and error. And you can lose a lot of money if you do some of these things. If you do the opposite, you can make a substantial amount of money. And I think this is important to talk about right now because there are going to be a lot of new investors that come into crypto over the next couple of years with so much potential and so much upside still in crypto. So let's talk about 10 different things that people are getting wrong. First of all, if you're thinking you should buy some kind of crypto because they have some really cool technology or something like that, and you think that all you need is good technology, that's not true. There are a lot of things that go into cryptocurrencies. There are a lot of things that go into making a good crypto. First of all, the major thing, does it solve a real problem? Does it have a real competitive edge versus other cryptocurrencies? Take a look up here. There are 21,000 cryptos right now. Do you think everyone's going to do well? How many do you think are scams? How many do you think claim that they have slightly more transactions per second than some big cryptocurrency, right? The fact is that a lot of them will use something like Solana or Cardano or Ethereum and say, hey, we have more transactions per second. We have more of this or that. And that's why we're better. Buy our token. And you might start off thinking, oh, it's a really inexpensive cryptocurrency. I should definitely buy it because it can have a lot of upside potential if it just gets to Ethereum's market cap. And for some of these top cryptocurrencies, they're kind of tried and tested. But the fact is, there are a ton of cryptocurrencies that are just crap. There's a lot more to a cryptocurrency than just the transactions per second or just one piece of it. There's security, there's utility, there's marketing from the team, there's how much money do they actually have in reserves just in case something goes wrong. There's a lot that they have to continue to work on over time, and only some of the top cryptocurrencies will actually get everything right and actually be really successful over time. A lot of cryptocurrencies will just go to zero and just won't be worth anything, and you'll waste your money on them. We don't need one more NFT marketplace that no one's ever heard of and the token isn't clearly defined in what they do and what that actually gives you. So just keep that in mind. Good technology or some big claims by their marketing team or whatever kind of crazy roadmap they have might not be enough to actually make them successful. Two, the big mistake a lot of people have is not looking into tokenomics. If you don't know what tokenomics are, they're basically like how the token works, what kind of supply do they have, what is the circulating supply, and how much is coming over however long new tokens are coming out. And really easy way of looking into this is just looking here. You can go search up whatever crypto you're looking at, but a lot of the time they'll show the circulating supply, which is how much is actually out there right now, and then what is the max supply. So Bitcoin has 21 million Bitcoin, and that's going to be happening over the next 120 years or so. Other cryptocurrencies don't have any max supply, or they don't show it because of the fact that it's going to fluctuate based on the use of the network. Other cryptocurrencies have different supplies, and the fact is some have a very large supply that's coming. If you go over to Metaverse, they're really well known for it, like the play to earn is really well known for having a really large circulating supply compared to a really large max supply compared to the circulating supply. So like with ApeCoin, there's only 31% of ape coins actually on the market now that will be on the market. Now, these are given out over a certain time period. They're always different. But the fact is, if you have a very large max supply compared to the circulating supply, and they're circulating new coins in a very short period of time, the fact is there are going to be a lot of new tokens that are given out on the market. Like early investors will probably be getting a ton of tokens over the coming however many months or years. And the fact is a lot of them were able to buy in at a very cheap price or get those tokens at a very cheap price. So they'll probably just sell them to lock in that profit. So there's going to be a lot of selling pressure if there's a lot of new circulating tokens. Like right now, everyone's talking about inflation in the US. And the fact is we oftentimes are really scared when there's 4, 5, 6, 7, 8, 9% inflation, but some of these tokens are at 20% inflation, 100% inflation. And I guarantee you there are a lot of people that have no idea how many new tokens are coming on the market. And basically you have to have as many buyers as there are sellers just to keep the price the same. So if there's a 20% more tokens each year and half of those people are selling, or half of the tokens are being sold, that's 10% being sold. Fact is, there has to be 10% of people trying to buy at that price just to offset that. So that's just something to keep in mind. And then another thing is thinking that high APYs are going to make you rich. So that's kind of along the same lines as the tokenomics, but if you see something about how you can stake your coin and get 1% a day or 10% a day or something, the fact is you're not going to make money on that most likely, because they're basically just giving a lot of tokens out, and the fact is the price of the tokens will probably come down over time. You've probably seen that, like Wonderland, I think was the name of it, or something like that. They basically were offering 86,000%, I believe, over a year, and it was just really inflationary. At the beginning, the price went up, and those people that got in early made a ton of money because the price went up and they're getting a high APY, but that was because there are so many people hearing about it for the first time. And these kind of gimmicky cryptos do well at first, but the fact is over time they usually fail because there's nothing really behind it besides a gimmick. And then from there, going all in because you're too excited too early. Like after you start learning about crypto, usually you get very excited very quickly because it solves real world problems. There's a lot of upside potential. It's a very small market. But the fact is, going all in instead of just dollar cost averaging and making sure that you're investing in a way that you can sustain is a really bad idea. Like Michael Saylor talked about how you should go mortgage your house and buy Bitcoin. Now some people say it's taken out of context, but something like that, if you actually did that, could be really detrimental because in the short term, anything can happen. And if you buy crypto on debt, the fact is you're taking on extra risk. So if it falls for too long or if it falls too far, you can get liquidated and then you can have issues, or you might not just be able to sell it. You might freak out yourself, like psychologically. You might not be able to withstand that and see the numbers go down, because just as fast as they can go up, they can come down. Over the long term, it'll probably do well, but the fact is you need to be able to sustain that. You need to be able to get through those times where it goes poorly. So DCA, or dollar cost averaging, buying a set amount like every week or every month or every 2 weeks, is probably the way to go for most people. So make sure you're not going all in right away. Another thing you can do that is a problem definitely is not taking profits. So many people, when they see their crypto go up, they get greedy. I know I've been there before. Let's take a look at BNB, for example. Let's say you were able to buy in. You were really smart. You got in like right when COVID happened, and you were able to get these tokens for $15. It went all the way up to $700. You're never going to get this perfect. You're never going to take profits at the exact right time. Like you might have sold right here. Again, you sell for $250, you think you're a genius because then it goes down a little bit, but then it races up and you realize you could have made twice as much money because you could have sold at $500 instead of $250. The fact is you still booked a really good profit, right? That's like a 15x profit or something like that. You need to be able to take profits because a lot of the time these will spike and then fall drastically. And we can go through a bear market for a long time. The fact is, taking some profit off the table makes sense. And even if it's hard to do, you can still leave some in there. Let's say you get a 10x. You keep 10% in there. You have the same amount that you originally put in the project. And then you have that 90% that you can take out and you can go reinvest into something a little bit less risky or just hold on the sidelines. The fact is, if you use the rule of 72, basically saying how long it takes to actually double your money, usually in the stock market, it takes 8 to 10 years. It takes 8 to 10 years to be able to double your money in the stock market, just in an index fund. If you get a 10x in crypto, that is like 30 years in the stock market in index funds. That's what people usually work their whole life just to get a 10x for. So taking some money off the table is probably a good idea, and it just makes you a lot more level-headed. You're not as greedy, and I think it's a good thing to do. I mean, you can do that at 2x, you can do it at 5x, you can do it at 30% up. Everyone's going to have a different number, and that's really something that you have to figure out for yourself and your situation. How long have you held this crypto? What's the position sizing? That kind of thing. But it's going to be really dependent on what you're looking for, but the fact is you have to have that ready to go and know what you're looking for. Maybe you just don't ever want to sell. Maybe it's a hedge for you against the US dollar collapsing and you just want to hold a full Bitcoin and you don't care where the price goes. Maybe that's what you want to do, but you have to have that set aside and make sure that you know what you're doing ahead of time. And then not being well diversified enough. I know this sounds kind of crazy, but so many people say when you're young, you can invest in anything, invest in risky things, because the fact is if you lose it, you'll have more time to make it up. But if you are putting everything in Shiba Inu or FTX token or whatever the cryptocurrency is, if you're putting everything in that can be really detrimental because we don't know what's going to happen. Even if you feel really strongly, the fact is you can be wrong. I'm wrong a lot. I know most people are wrong pretty regularly about their beliefs. And yes, you might miss out on some profits, but the fact is it's better to be somewhat diversified because even like right now, if you had some money in Tesla stock right now and it's at $900, right? It hasn't gone down really that much throughout the year. And then Bitcoin falls down. You can move some money over from Tesla into Bitcoin, or maybe you have some real estate and you want to take some money out there and put it into something like Bitcoin. It gives you options and keeps your head a little bit more level. And remember, even though they say that you can lose more money because you're young, the fact is it's actually most important to have money when you're young because of compound interest. So yes, you'll have a ton of time to make it up if you're 25 years old and you lose $1,000. But the fact is that $1,000 could turn into $10,000 or $20,000 if you just invest it in a smart way. And I believe some cryptos will be around for a long time, but a lot of other cryptos might just fall off the side of the map. A lot of them might not be relevant in 20 or 30 years. So you might have your investment go to zero and you could have missed out on a lot of good gains in something else. And then assuming, this is such a big one. Another thing is assuming that because a crypto is inexpensive, that it will move faster or move to a higher price easier. And I have this happen all the time, like with people, like friends and family and stuff like that, people on the channel, everywhere in crypto, people misunderstand this. And this is why I think that if you've never invested before, crypto might not be the best place to invest because it's definitely easier to get bamboozled in crypto by marketing than it is in normal investing because they realize some people just don't know what they're doing. So for example, if you think XRP can move up to $1 easy because it's just 35 cents, right? If it just gets to $1, that's only like a 65-cent increase. You might not understand really how this works. For example, you really have to look at the market cap. The market cap is how large the crypto actually is, not the price of the crypto. XRP is a $17 billion crypto. It would have to triple in value. It would have to bring in and triple the market cap, so $34 billion more in the market cap to be able to get to that dollar mark. If you think that Shiba Inu, if it just gets up to $1, you'll make 10,000x or 100,000x, whatever that is, however many decimals it is. And if you just put $100 in it, you'll become a millionaire. That's not going to happen because the fact is, if it did that 10,000x to get to $1, it would have to move up a huge amount in market cap. It would have to 10,000x its market cap. That would be incredible. I mean, it would be larger than Bitcoin by 100x or something like that. And of course, I'm just throwing out numbers, but the fact is you have to look at the market cap. You have to look at not just the price of the crypto. And so many people get that wrong. I know for most people that's going to sound obvious, but the fact is it typically doesn't work like most people think because in real life, you usually don't have to deal with market caps. You just look at the price of something, and if one thing's inexpensive and one thing's expensive, it's really straightforward. But in this, there's one more layer to it. Again, just look at that. And some people will say, oh, well, if there's a token burn and they burn 99.999% of crypto, my price will go up. I can just hold on to the tokens, but the fact is they're not going to burn that much. A lot of tokens burn, or they'll take profits or have some mechanism in them to burn tokens, but it's just a slight pressure on the price. It's not going to drastically increase the price because they're burning a lot of tokens. Most of the price appreciation that comes from token burns is because people are excited about it. Even BNB, they're probably one of the best at it. They take a lot of the profits from Binance, the biggest crypto exchange in the world, and they go buy back their tokens. They're buying a really significant amount, like $1 billion every quarter. But the fact is their market cap is somewhere around 50 billion. So the fact is they do buy some tokens, but it still is just a little bit of pressure on their price. It's still great for the token, but the fact is it's not going to, triple the price over a year because they're buying some tokens. And then another problem is assuming all cryptos are generally the same. They're not. They have different value. They have different reasons for holding. It would be kind of like saying that all cars are the same just because they get you from point A to point B, but they do it in a very different fashion. Like hopefully in crypto, whatever you buy is going to go up in price, but they all have different risks, right? If you're driving a beater car that you're not even sure if it's going to make it down the road and it's really risky, but you can do it for a little bit cheaper than like a high quality car because you can just buy it for a lower price. The fact is you're going to have a lot more risk trying to get where you want to go. If you get there, great, you save some money, but the fact is it's probably not the best option. Kind of like buying a small cryptocurrency. If it increases in price, that's great. Maybe it saves you, or you make a little bit more money because it can appreciate a little bit faster. But the fact is you probably want to be buying some of the top cryptocurrencies. Hopefully that makes sense. I think you understand what I'm saying. Basically, every crypto is different. Bitcoin is not the same as any other cryptocurrency. Ethereum's not the same as any other cryptocurrency. And if you just assume they're all about the same risk, you're really wrong. Another thing you can get wrong is assuming that people have your best interest in mind. Everyone in a community has your best interest in mind. A lot of people just don't know what they're talking about in communities. And the fact is they'll continue to follow someone into a burning building. If the price goes down and down and down and there's some problem with the cryptocurrency, they'll still keep on shouting that it's going to the moon because they don't want to believe that they got something wrong. Fact is there are a lot of scams in crypto. There are a lot of things that people get wrong in crypto. There are a lot of honest mistakes in crypto as well. But you need to learn as much as possible so you don't fall for those mistakes. You don't have those issues come up and you fall for scams and marketing ploys and stuff like that. Another thing is thinking too short term. Of course, if you're a trader or you're a swing trader, day trader, or you have some specific target in mind, yes, you might sell and buy in a short period of time, but generally you want to be thinking longer term. Unless you're, again, really experienced in the market, if Bitcoin goes down $2,000 next week or next month, and then you see all this fear, uncertainty, and doubt on the internet, unless something has really fundamentally changed, I'm not talking about some country saying that they're going to ban crypto or something like that, unless maybe it's the US and it's on good authority that it's going to be banned or something like that. If crypto just goes down, just know that there's going to be fear, uncertainty, and doubt because that gets clicks. That's what brings people in. Everyone that has their crypto is worried that there's something wrong. But the fact is, it probably shouldn't change your outlook on crypto. If anything, it just makes it a little bit cheaper for you to add a little bit. But you shouldn't change your outlook just over a couple weeks if there's no real news, or if the price goes up or down. You're going to feel some greed. You're going to feel some fear depending on what the market's doing. But your long-term outlook should stay unchanged. So if you're thinking about selling everything or just buying a massive amount of crypto or something, just know that that's probably because you're emotional. And again, you probably just want a DCA instead. Now let me know your thoughts on this underneath the video. Let me know if you want me to do this on something else like stocks. Let me know what you've gotten wrong in crypto underneath the video, and I'll see you in the next one. Bye.